Welcome, Shilpa. Welcome to this podcast Signal Quest with BHK.
Thank you, Harish. Thanks for inviting me. It's such a pleasure to be here on this podcast with you. Looking forward to our discussions.
Yeah. I think what we spoke about just before we started is basically going to be the theme of the talk where, we were just going on and on in the preface
Yes.
itself.
Oh, yes. Conversation with like-minded people, with the friends, is always fun. And I followed your work and found it to be amazing and inspirational.
Yeah. Thanks, Shilpa. So, to get started, I have a bunch of questions with me. First one is almost like the Brownian version of your career, right? So walk me through that. Engineer into markets. You began in equity research at UTI, straight out of, and in the you got detour into corporate finance at ICI India, then returned to the markets. So what drew you to investing, and what did see both sides help, especially so early in your career?
First of all, I love the way you frame questions. They're so interesting. That itself is so interesting by itself. So, as I say, the best place to start is start at the beginning. So, I was born and brought up in Bhilai. It's a steel township, and the entire ecosystem is around that. So, pretty much everybody there is an engineer or wanting to be an engineer. And before the whole quota thing happened, I think Bhilai was sending out the largest number of students to IITs. I think in my year, there were 35, which was an insane number. That time IT seats were also very, very restricted. So, no, I actually wanted to be an engineer, because in other cities, people go for picnics. In summer vacations, we go to see steel plant. How the iron is being molten, how it's cast into, so, all that. So I wanted to be an engineer. But Harish, somewhere in third or fourth year, I did realize that time there are very few opportunities for women in engineering itself in terms of career progression. Because when I started looking for internship, it was campus led, but realized the companies were just not taking girls for shop floor kind of thing. And I was a rank holder. I was third in the batch, and still I struggled. And then my brother also said it's a good idea to do an MBA. So I said, explore the world, learn a lot about the world. And I was very lucky that I got into A. The academic rigor was off the charts, and exposed to so many subjects, finance, HR, marketing, operations, strategy. And I found myself naturally gravitating towards things like portfolio management, business valuations. So first year the course is pretty much standard, but second year took more of those electives because once you explore, then you want to go deep into the things that you like. So that is where I went into. And I think the seeds were also somewhere there in my childhood, maybe, because dad was an engineer. He was from BHU, but he was also an investor. So, Sunday mornings we had those IPO forms on our dining table and you're filling out, and there was this excitement of IPO allocations. My brother, when he was in ninth standard, he subscribed to capital markets. And there is very, very, I don't know, cute or funny story. So once I was very small and having cold coffee, and I said, "This cold coffee, so yum. Let's buy Nescafe shares." Because, of course, there's nothing called Nescafe shares. But honestly, 10,000 rupee of investment in Nestle that time is close to 1.5 to CR. So that is what is the beauty of investing. That is the beauty of compounding. So yes, so then coming back to the placements at Ahmedabad, I wanted to be in the capital markets. Was very very fortunate to get the role of equity research analyst at UTI. UTI was the largest AMC then, and that is around the time they had started formalizing their equity research. Earlier investments were not so formalized. You know somebody, you know this company, but luckily the gentleman who was heading research there was also an alumnus of A. Great guy, learned a lot under him. And the entire team, my juniors, peers, they were all MBAs from IIMs, XLRI, FMS, a great bunch of people to work with. Great learning. And the best part is equity research. Just by the nature of the work, you're meeting CEOs, CXOs, CMOs, it opens up those doors very early in your life. So in one of those meetings with ICI, when I was sitting with them across the table, management invited me to join them. So that's how the foray into corporate finance happened. They said, But I'll tell you why. It may seem disconnected, but it was amazing. Because whatever you do when you're a research analyst, you're looking at companies from outside, Harish. When you are in the corporate, you actually see how things on ground work, how capital allocation decisions are taken, how strategy is made, what are the actual problems in connecting debts from customers, something is overdue. How do you sell? Selling is one of the biggest things, how do you actually sell a product to the customer? You have competitors. So you actually see it from inside. And I was very fortunate. I was given the entire charge of finance of a very small department, but it had 360 degrees. So I was doing audit, banking, logistics. So it gave that come. I was negotiating rates with freight operators, everything. So that actually formed, and I mean, that gave me amazing insights and also really helped me in my equity research. And 2 years into ICI, it so happened ISIC was setting up its institutional research desk. I mean, now they kind of restarting. And one of my ex colleagues at UTI had joined them, Harish, and he referred my name. And couple of interviews later, I was in, and equities was anyways my passion more than corporate finance. I was happy to be back in the markets, and that's how the whole thing came about. And pretty much then rest of the career, most of it has been related to investments. I think your other question was what was the learning? See, so early on, I was fortunate to see leadership up close. And I would say the biggest learning is one thing that matters the most in any company is the quality of leadership. If I have to close my eyes and pick up a company without looking at the numbers or anything, I will look at the leaders because they set the context, they set the culture, they set the vision. And if you have right leadership at the top, Harish, a company is unstoppable. So that is my earliest and the first lesson is that leadership matters the most.
Right. And sort of, juxtapose your early career with how markets in India were growing. So,
Yeah.
what was that, whole time like for you? Because so much was going on at that time.
Oh,
Yeah, I was going through a very exciting phase.
no, you're absolutely right. I mean, that 2000, I mean, Indian economy during that time went through underwent a complete transformation. And with these roles, I had let's say, the ringside view of the Indian economy, because from 2000 to 2008, 9, we had the biggest bull run. And it was those were exciting times. I would have done hundreds of road shows in India, globally, meeting corporates, meeting fund managers, getting them to invest in India. So very amazing. I mean, that was a golden decade of my career as well. And all that came through very well. I mean, as I said, we were setting up equity research, institutional equities division. Over 9 years, we scaled by 33 times from nowhere to become a very significant player. ICICI Securities, we gained market share, we built up a name for ourselves. So, yes, in terms of learning, in terms of whatever remunerations, every which way, it was a golden time, both for Indian economy and for professional lives.
How do you see the entire space changing, in the lab, especially that decade? How did it change from, say, the late 90s or even mid and early 90s? Like you said, I also remember my father used to get the Business India magazine, right? It used to be so thick. It was most of the other pages used to be just about his IPO, and I would just, flick through that. You don't want to look at the, just want to read the articles, the opposite of you, I guess. But those were the days, the 90s and
Yeah.
earlier, right? But 2000, suddenly everyone started hearing about the, gardener of Infosys who became one around 30. And suddenly everyone started understanding the value of stocks. Everyone started investing
Yeah.
in terms of retail. Uh,
Yes.
so what did that change? How did that change? That
I think also maybe we need to go little back also, because the liberalization started in 90s. And we were very fortunate because, the impact happens over a couple of years. We were very, very fortunate to witness that, Indian economy went through that complete transformation. And, what IT industry did to India was amazing because earlier there was a despair. There used to be a despair, people were not getting jobs and all those things. But IT was recruiting at a scale. Also, I think what happened at that time was animal spirits were there. I mean, people were so aggressive about capex and the whole growth story. We had the right government, we had the right environment, foreigners got excited about story. So everything came together. The benefits of liberalization, I think they all came in. And we were on a reform path. You take any sector, there was a lot of liberalization, there were relaxation of the norms, the FDI was made simpler. So it just everything came together. And IT was a great story, definitely.
Right, right. And you mentioned about the importance of great leadership
Yes.
because it sort of sets the context and gives you an indication of how the company will do.
Yes.
But besides that, what in your experience separates a great business from a good story? And I'll give you some context. I remember Ashwin Damodaran's video, and he's also written a book about how he would not bother about the story and how for years, and he missed out on so many opportunities because he would, stay away from the story.
Yes.
And now he sort of, looks at both the story as well as, the real numbers that he looks at. Uh, but what's your take on this? What's that separates a great business from a good story?
Oh, that's an amazing question itself, Harish. So see, especially in India, we all love stories. I think globally, our grandmothers told, our mothers told, we all grew up learning, hearing, enjoying the stories. But how do you separate the two? So for me, it is numbers. And to borrow from Shakira's song, if I may, numbers don't lie. They just don't lie. Okay. Everything, Harish, shows up in numbers. Okay, not only the scale and the profitability, but even the quality of capital decisions, even the quality of governance, everything shows up in numbers. So if I just see the numbers, you know whether it is a business worth investing in or not. That is typically one of the things. Uh, the second is, once you have analyzed, tens, hundreds of companies, their P&L balance sheet, you also start developing your own rules of thumb and your own intuition. So while earlier it's all Excel, but as you progress along, you get that intuition, you know what is right, what is wrong. But numbers, definitely, there's no getting away from numbers. Second, I have of course talked about leadership. You do look at the leadership. The great leaders may move from one company to the other and make that company change it for better or worse. So that is something that I always look at. Third, for me, Harish, the way I did analysis, and even now I do, whenever the opportunities, you do a 360-degree analysis of the company. So for sure, you listen to the story what the management is saying. That is a must. That's a starting point. But you meet everybody in the ecosystem. So it could be your vendors, suppliers, customers, ex employees, financiers. You do plant visits, you speak to the competitors. And once you've done, so it's a fair bit of legwork, it's a fair bit of granularity. But once you have done that, Harish, then there is very little place to hide. And that does give you an edge. Once you put all these three together, your qualitative and quantitative numbers, you are good. You're good to go.
Yeah. Yeah. So any pivotal moment that you remember where it was like something that you would never forget that this is a lesson that I'm not going to forget when it comes to understanding a company. Whether it could
Oh,
be our company or somebody telling you something pivotal.
oh, when it comes to investing, there's so many stories. I can't share names, man.
Yeah.
Indian managements have only now become slightly better on corporate governance, but before we go to some of the primitive moments, there was a company we visited in Madhya Pradesh. And you would realize that on that gross block, the another company in the same industry is doing 2 to 3 times the revenues. So you can immediately see, the kind of gold plating that has gone through. Then there was another company in Himachal. It was USFD and everything, and great story pitching out. And you realize when you went for the plant visit, they had just lined up some finished goods for us to see. The plant was not even running. So these are not pivotal moments, I would say, but definitely great stories. See, pivotal moments come also from understanding what value you are giving to the company. Once you've done these three, you can identify a great business. You can identify not a great story, but a great business. Uh, but Harish, not all great businesses are great investments. Very important thing is to understand the price that you're paying for it, because those kind of mistakes we have made. You identified a great company, ticked all the criteria, But if your entry price or the price that you're buying the company is not right, there can be a very long period of time, 3, 5, even 10 years when you don't make money. So that is something that is learning that one has to keep in mind, because once you're in the investing journey, over a period of time, you do get the knack of identifying great businesses. That happens easier. Getting the price right is the second stage, and that is very important.
Right, right, yes. And how do you see, things changing now in the last 2, 3 years with so much of AI? We spoke about AI before the conversation as well. So how is AI really helping, and where is it dangerous to sort of depend on AI for any kind of analysis or understanding?
Yes, that's a very good question. Everything has two sides. When, as I said, sometimes what people do, you put up management some earnings call, and you put up that call, and the AI will give you a summary, which is very easy. But then you miss out the nuances of what the management has said. So if you're not going through the whole thing and you're just doing a summary of the call, you put up the document, you will miss out on the nuances. See, investing is a lot about reading between the lines, picking up the tones, what management said last time and this time. And some of those things you will miss out. So somebody who's done, let's say, 10 years of grind or 5 years of grind, AI is very useful because it saves you time. You have done the grind earlier. But if you're starting out, I feel sometimes you may miss out on those skills, Harish, the kind of grind that went into it, because if you're using AI, you don't develop those intuitive understandings and your own rules of thumb. So you have to balance that. It does cut down the process. It does make investing easier. What you have to watch out for now, everybody has the same tool, so
Right.
then it gets commoditized. So where does your edge come from? So that is something that you have to work on. Then your edge comes from your temperament. How do you look at the markets? How long you can be in the markets? So then when the research gets commoditized, then you look at temperament, you look at discipline, you look at patience. And yeah, so these are the other things that give you an edge. So
Right.
it's definitely useful, for sometimes for me when I don't have the time or I have to compare multiple things, you can put up multiple reports and it gives you summary.
Hmm.
But yes, when you're starting out, it's important to do that hard work and as
Yeah.
well.
Have there been moments when you've been pleasantly surprised with AI's output, saying, "Oh, this is something which I wouldn't have found so easy."
Yes, definitely it is there because AI scans across, every investor who's been there before me or along with me. So it scans that. And now AI is building memory, which was not there earlier. So now it knows me as a person, it knows my personality, it has a complete track record. So that memory function of AI, which was not there in Google or anything else, that is very useful because it keeps a track of what I've asked, what is my personality trait, what I'm doing. So the way AI is evolving, the memory part of it is definitely a surprise, and so is the agentic part of it. It is definitely positive. I mean, there's so many, especially for an entrepreneur. Like earlier, to run the same business, I would need a much larger team. And when
Right.
you're starting out, how do you invest in that larger team? For example, I don't need an editor now. I've written a newsletter. Happily, ChatGPT or a Perplexity or anything would edit it. So, sending out reports and many of those things. Entrepreneur now in today's age is much easier. As people say, now it's very possible to have single person unicorn. AI easily enable that.
Yeah, yeah. So, like, I think there were a couple of episodes earlier on this podcast where we spoke on AI, and I think one of the best analogies that came was that AI is like a very great intern.
Yeah.
So, in the hands of a great human, it can be, really, really powerful, but you can't put the intern to be, running the company as well,
I
right?
won't even say intern. Yes, intern, a very end to intern, Harish.
A smart intern.
Very into, very quick. Very quick, very end to intern. It's
Yeah.
an ideal intern. Absolutely, you nailed it. It's an ideal intern.
So you mentioned about the current avatar of running a company as an entrepreneur. So continuing with that Brownian motion that we were speaking about at the start, right? So how did this come about? How did you get out to becoming this founder in the last couple of years now?
Yes. So see, I would say the various aspects of what I've done earlier. One could say two sides of a coin. But since they're more than two sides, I would say they were, imagine a Rubik cube, Harish. So the way I would say they're different faces, what I did, but they were all connected. They're not separate. So they in a way formed part of the whole. So it's not like, one did gardening and farming in between, which I've done, but not related to this. So they in a way form part of the whole. And for me as a person, and I think for you, Harish, also, and many other people, one of the biggest joys, really, Harish, is the joy of creation. आप Brahma bolte ho या जो भी बोलते हो, that's the biggest joy. And it could come in so many forms, Harish. It could come, I mean, one could write a book, or one could be a painter, or you could build and scale businesses. So I had done pretty much all of it. The only thing that was missing was setting up my own business. And then I thought, let's do that. I really wanted to do that. But then what do you do? What business do you do? You can sell tea, you can sell samosas, but what do you do? So I thought there should be a couple of criteria when you decide what to do. One is you should enjoy it. Because I'm looking at a 4 decades journey with Iravati. So it should be something that I enjoy. And investments is something I've enjoyed. It's actually, people talk about work life balance, but in my case, when I'm stressed, I come back to investments. I sit and I look at it and I find it deeply de stressing. So it's something I should enjoy. Harish, and then it should be something that I'm good at. I cannot be running a company at something I'm not good at, and I think I'm reasonably good at what I do. And third is, once you met these two criteria, Harish, it should be something that there is a need for. There's a point if you take the first one, there is a need for it. And I would just like to elaborate that a bit. So in India, there is a lot of wealth generation that has happened, Harish, by way of jobs, as you said, IT, capital markets, corporates. Then there be salary hikes, bonuses, ESOPs. So there has been a lot of wealth generation. Uh, but the wealth has not been deployed as well. The wealth deployment part has been suboptimal or it has been mismanaged. And there are various reasons for that. Busy professionals, such as you said, they may not get the time or they may not have the necessary tools. And then there is rampant mis-selling. So, their investments were kind of ad hoc, a bit there, a bit there. They were not following any asset allocation. And therefore, the returns were suboptimal or negative in many cases. And there is outright fraud as well. So our philosophy is that your money should work as hard for you, if not harder than what you work for the money. So that is the whole going principle. And therefore, Iravati Wealth was set up with that principle that our investors for ethical and sustainable wealth creation journey of our investors. So that is where it came about. So yes, it ticked the three boxes and he said, okay, let's go for it.
Right. I can sort of visualize you sitting and drawing the Ikigai and I think. And what is on the name Iravati? I know we thoughtfully chose it. So tell us more about that.
So I was very clear that, because I'd be working mostly with Indian investors and would be mostly with Indian firms. And any which ways, I had wanted the name to be Indian. I mean, not a Greek name or a Latin name or a name which doesn't make sense. Like I can call myself ABC or X Spicy, but it had to have a meaning. That was my thought process. And then Iravati is, of course, an Indian name and is the name of an ancient Indian river. So what does a river do? It adapts itself to the landscape. So if there's an obstacle, it will flow around it. And it nourishes and nurtures everything along its way. All the greatest civilizations came across the rivers. There's growth, there is prosperity along the river. So that is what we thought, we should be adaptable, flexible, nimble to adapt ourselves to the changing dynamics of the investment landscape. And of course, our investors' portfolio should grow. So that was the whole thought process.
Very nicely put. I think it's sort of also a reflection of who you are, how do you think about the company that you've set up, and I guess it also sort of sums up the company's purpose for its customers. Right? So yeah, that very nicely put. Um, would you call this like a genuine second innings? Because like I said, you've done a bunch of things earlier. though they are connected, they're all sort of, leading up to Iravati in some way or the other. Is it like a second innings that you see?
Um, I won't know, yeah, second innings, but definitely, yeah, maybe second innings, but definitely something. It's a continuation. So when you maybe call it second innings, I don't know, maybe there's some implication that that was first and this is second. I would say it's a continuum. There is no break. It's a continuum. This is what I did. I did similar things earlier. It is just that I'm doing it under my manner. That's the only
Mm,
difference.
mm.
And
Right.
doing it also gives me a lot of flexibility in the way I want to build up Iravati and what it should stand for.
Mm.
So there's a lot of pressures and the constraints that are off, and one can do things with it that were not possible otherwise.
So, just tell us more about that. Your firm that you are running, in the same space of which you worked earlier in a company, right, where you were the one who was running the entire company. How does it feel different? What are the differences?
Maybe two, I would say. Uh, Maybe many, but let's focus. I would like to talk about two. One is the whole, see, not saying that others are not, but uh, Iravati, the core foundation is ethics. It is not something that's a slogan or a thing that we talk about. The entire foundation is built on ethics and integrity. Okay, now you would know, and I have faced it. Uh, about the mis-selling and the frauds. Okay. Now, when you dissect it, Harish, what is mis-selling? Mis-selling is selling a product with a very high commission or selling the wrong product to an investor to justify your gains, shareholder gains. So you are prioritizing shareholder over investor. And many companies, when you sit in the boardrooms and the meetings, you would say, "No, company ka profit kitna hua?" Very few people analyze ki, what is the investor's portfolio has given returns. Well, Hanish, we wanted to flip that narrative. So, in the way I prioritize, this is how it goes. Investor is top priority. Second is my referral partner. Third is the AMCs that we work with. Fourth are our employees. And fifth really is the shareholder. So, this is how I prioritize. So, in this way, there is no conflict of interest at all. So,
Mm.
this is one thing that we wanted to do. And we do not distribute any products that we ourselves, either the founders or family members, have not invested in. So, it's not that, apne restaurant mein you're making something and serving, but you are eating at other restaurants. So we don't distribute those products that we ourselves have. And those come after deep due diligence that we have done. Because there's so many, products out there in the market. Which one you do? So we do a complete due diligence, identify, and there is complete alignment between what we invest and what we suggest our investors to invest in. So that is how it happens. The second difference is we are more into alternates, and that is an evolving. Of course, it's evolved a fair bit, but most many other wealth managements are still into mutual funds a lot, but we are into alternates where we believe that risk-adjusted returns are significantly higher than in the traditional mutual fund space. So these are the two factors, and it gives me a great joy to work around with these two factors.
Right. So I have follow-up questions on both, Shilpa. The first one, right? I think it's great the way you put one, two, three, four, five. And you said there's no conflict of interest, but there might be,
Yeah.
conflicts that might be coming up, right? Where there are situations where, there is a conflict of interest between one party at one level and
Yes.
the other, right? So
Yes.
give me examples where you've taken decisions which may have been easy for you, given that there is such clarity on what is the prioritization, but it might have been difficult for someone else, or maybe in companies where it people don't take this as seriously as you do. So, any examples that you can give without making names that you don't want?
No, no, it's very simple, Harish. We have mastered the art of saying no. So we say no to a lot of products in AMCs. So we don't do product push kind of selling. We don't chase trends. We don't do unnecessary complexity. We don't do high commission products just for the sake of commissions, because today I can triple my revenues by saying yes to certain products and AMCs. It is that easy. And investors trust us so much, okay? It is so easy. We have even done products with zero fees. because they were good and they were there better for the investors, where the fixed fee is zero. And we have not made money or very little money. So honestly, what we make out of our investor is really, really a very low priority for me. What is the only priority is for me is when an investor comes to me, what's the wealth he or she can make. So that is what stays. And with that criteria, I have learned to say no to so many things. And when you focus that, ethics and integrity matter, one is, of course, the wealth creation, and second is ethics and integrity, you declutter yourself, you clear up your bandwidth, 95%, and also you get possibly 95% of competition. Don't quote me on that, cut that out. but just by doing the right thing, that's all it takes. Right? Learning to say no and not falling into these temptations, because honestly, it doesn't serve my purpose at all. Sell high commission products. I'm fine selling a zero commission product to my investor if I think it's right for the person. I'm completely fine with it.
Right, right.
Because I do not have a short term approach. I'm looking at a multi decadal journey, not even year, multi decadal.
Right. Yeah. So another thought on this, not necessarily from your space, but something that I've seen is what may externally appear as somebody misselling.
Yeah.
Sometimes it's just a lack of capability of that person
Yeah.
to grow wider perspective, right on the horizon. We hear about, sometimes we hear about doctors, right? So
Yeah.
they're specialists. So they will say, okay, now you have to do this because that person is a specialist in XYZ, but has just failed to sort of even consider, other reasons for what needs, what the diagnosis could be. So in those situations, it's not a case of mis-selling, but
Yeah.
just the fact that this person is not, you know, ready to expand his or her horizons. How do you see that happen?
No, you absolutely
Yeah, this is not about my intent. This is
agree.
a systemic thing that is happening.
You absolutely hit the nail on the head. Sometimes it's not, at the RM who is coming to your door and telling, it may not be malintent on his or her side, as you so rightly said. But lack of product knowledge is a bigger danger than mis-selling in terms of commission, because see, many products are just sold on past track record. This fund manager is generated 20% and you invest into it. That's without understanding what went into it, what was the risk, or what was the beta of that portfolio, whether it will weather in turbulent times or not. So you absolutely hit the nail on the head, because same person could be selling FD or an equity product or an insurance without understanding the nuances. And as you rightly said, it's not a question of the intent, it's not a question of fraud, but it is sometimes just lack of skill, lack of adequate product knowledge. But for investor, it's equally scary.
It's quite scary for the English. But we see that in so many different areas, right? Where you expect somebody to be an expert. And that's where, like we said, the story, the entire branding around, someone feels like, oh, yeah, right, this person is an expert. But just comes with a very narrow, like that pass with the.
No, absolutely. And equities are sold as, almost guaranteed returns, That is scary. You've got 20%, you'll get 20%. The person sitting in front of you may not have would not know, especially first time investors, what it means. So that becomes absolutely not a question of intent, but maybe the internal revenue pressures, the targets given, they become the cause. You have to raise 100 crore AUM in the 1 year. That's your target. Your bonuses are dependent on that. And, sometimes you may go with good intention, but that's a reality of corporate life. You can't be away from it.
One of the things I've been, incessantly repeating to our son is don't ask a barber if you need a haircut.
So well said. Absolutely. Absolutely, Harish. Absolutely.
Yeah. And the second part where we said about alternatives, right? So how is it picking up in India, in the world? What are the opportunities in terms of alternatives that people should be looking at? And why did you pick alternatives as a focus area?
No, no, absolutely. Abroad, it's definitely a much more evolved market. In India, also, it's not new now. It started about maybe around 2010. So not new, but compared to mutual funds, a much smaller baby. Uh, so, Harish, every asset class has its place under the sun. Okay, for somebody who's starting out, maybe kids starting out in their career, mutual funds and FDs are the best. There's no taking away from it. Okay. Uh, but in those, it's difficult to beat the benchmarks post fees. Largely saying as a category, uh, but they help you with systematic investment. You can do your SIPs and, at least, and there are no minimums. So with a 5,000 rupee also, you can create a completely well diversified portfolio with equity, Indian equity, global equity, debt, gold, silver. Even 5,000 rupees enables you to have a robust asset allocation. And that is not something small. So definitely mutual funds are very important. But as you move up in your investment journey or in your careers, and once your, let's say, net worth crosses 50 lakhs, then it is a time to look at a PMS, whether an equity PMS or a debt PMS, which are more sophisticated products. They are more concentrated products. They are run by professionals, and because they're concentrated, they only pick the top of the products. So, as a category, PMS, whether equity or debt, outperforms the mutual fund, debt or equity. Okay, so that is the reason we have gone, because now we cater to that segment, the
Hmm.
HNI and the ultra HNI. So, and the risk adjusted returns, as it said, are higher than in mutual funds. And then in alternates, you go further. So once your net worth crosses 2 CR, then within equity, you could start looking at unlisted equity, okay, where the alpha or the returns generation potential is much higher, so is the risk. What happens today, many people invest as angel investors in some of the equity, but you've not done your due diligence, kisi friend ka company, and then you invest in it, and many times it may not work out. Whereas here, through Cat 2 or Cat 3 funds, you invest in unlisted companies where you could have very high returns. And here, a funds managers and a team's due diligence and research has gone into it. So once you cross 2 CR, you could look at unlisted. You could look at private credit. Again, private credit. Like if you look at MD, it would be 6 to 7%. Private credit would be upwards of 20%. Sorry, 12%. And again, you do with a fund manager's expertise. You don't do it on your own. And then again, once your net worth crosses 5 CR, then you could look at PE funds, VC funds. No, they're not suitable for everybody. Of course, the risk is slightly higher. And also the liquidity is limited because your funds are tied in for a certain period of time. But again, the alpha generation of a PVC fund as a category is higher than that of public markets. But it is not suitable for everybody. There could be lock-ins, their risk element is slightly higher. But as a category, if I say PVC funds would outperform your public market equivalents. So I would say this is a journey that an investor should have, which is reasonably conservative, which is well thought through, and which is robust. But every asset class has its place under the sun. There is no doubt about it. So there's no right or wrong, nor is there any good or bad. It is what is suitable for you at what point of time.
So why did you pick the alternatives space? Is it because you wanted to focus on the HNIs, ultra HNI space? Is that the reason?
That is one of the thing, and that is where the challenge is. You want to do something different, and so one is on one side you have the customer, which is HNI and ultra HNI. That is the focus customer, because when you start out, you define what you want to do. The kind of uh, segments you would want to cater to, for which is HNI and ultra HNI, and the kind of products. The challenge and the interest now for me is in alternates. And I have myself been investing in alternates since 2017, and I've seen the potential. So it's almost 10-year investments into alternates.
Mhm.
And Harish, even now there's a perception that alternates are riskier, but that is actually not so. They are actually managed so well by the fund managers, and also see the underlying investors. They're ultra HNIs, they're family offices, and institutions investing into alternates. So even fund manager is very responsible. He or she is answerable to them. Here, unlike mutual fund, you have a direct one-on-one connect with the fund manager. So she is answerable. So the risk. riskiness is definitely not higher in mutual fund. It's just
Mm.
that risk-adjusted return as a category, it's definitely better in mutual funds. And that was excites me.
Right. And in terms of asset categories within alternates, do you also do things like, I don't know, art or wine? What, keep hearing about these exotic categories which are great investments. Do you
Uh,
also, right? Is it a valid sort of class for?
no, it sure is, Harish. But given the background and given my own DA, maybe what I do alternatives, we also a little bit conservative in the way we approach our investors' wealth. So within alternates, there's a category called Cat 1, category 1, which is venture. We don't even do that because that is comprises more of early stage startups where
Okay.
the risk of failure is higher. So we don't even do Cat 1. So we start from Cat 2 onwards, where it is late stage or pre IPO, which is the success rate is higher and loss of capital. So we also see loss of capital as a criteria. Suppose you're not making money, but you should not lose your capital when you come to
Right.
Iravati. We don't even do Cat 1. So, as I said, we're very focused on the risk management, due diligence, a very strong part of what we do. So, therefore, we, as of now, not doing catch one, nor are we doing art and vice.
But people do that in India. I mean,
Yes, yes. Art, wine, I'm not so sure. Art definitely is. Art definitely is. And it's a very, very investable space. There's no doubt about it. You can have huge multibaggers out of there. But that's a completely different ball game, Harish. And also, I feel one should stay within the core expertise that you have. I mean, I would really need somebody else who's an expert in art to be leading that. And she should be better than others in the field. Uh, just by looking at an art and valuing it, I don't have that. So it's also about staying true to your core expertise.
right.
And also, man, it's a bit of fiduciary responsibility when you're handling somebody's wealth. So you have to be a little bit that much more careful.
Right. And you mentioned about,
Let me show you my art, Harish. So sorry to cut it. Can you, I don't think you can see that well. The light is also reflecting poorly. But
yeah, is
two
it an upper baby?
mother and son, two paintings in oil. You can't see
Yes.
them well.
Yeah, I can make it out, but not as.
So those are my paintings. I can paint, but I don't think I can qualify myself as an expert in art. Expert enough to guide on investment.
Right, right. So, I'm going to cover about all the other sides of Shilpa that we've not spoken about, but and so art is going to definitely feature there. Before that, I wanted to ask you about ethics, right? When you're speaking about the passion and how steadfastly you hold ethics as sort of a central tenet of the came through, right? It was very obvious. So ethics and transparency, and I know double or which is also something that you built around business ethics and governance. So how did that come about? Why did that come about? And what are you doing?
See, also, how do I say it? Uh, this is the values that you've grown up with, Harish. Honestly, it basically comes down to, what is your core DNA? What are the values you've grown up in? And the space that I inhabit, which is high finance. The temptations are huge. With slight swing, you can make so much. But the idea is to not be tempted by those temptations. And that basically comes down to your value system. I also got introduced to Vipassana very fortunately in 1997, which is like quite a long time ago, almost 3 decades. And once you've done that and the value system that you've grown up with, I remember a small story. My dad, for a while, was also in charge of purchase at sale. You cannot imagine the quantum of business that he was responsible for sale. I mean, they are the and the norm was taking commissions on that. Okay, that was a norm. And I remember a gentleman coming to our house and he says, we anyways built it on our pricing. You know, it is anyways there up locally, it is anyways in our pricing. And that I don't refuse. I mean, there's no question. And purchase and sale, the scale is unimaginable. And that scale and that point of time where salaries were so limited to say no was a huge thing. And then what you say yes or what you say no to. But the kind of tailwinds you get by just doing the right things, that also, I have experience. So very, very fortunate.
Mhm. Right. Yeah. Yeah. So, in fact, when you were mentioning that my father worked in, purchase and ornaments factories. So I can imagine.
Ah, yes. Amazing. Really?
Yeah. Yeah.
You have to share stories now, Harish. Now
Then
share
like
it
when you
for
start when you start your podcast, you like come as a guest.
done. Done. That's a done deal.
No, but I think for that you
Absolutely.
should get my father. He's an excellent record player. So he will tell you a lot of stories. You always
Oh, I'm sure. I'm
love
sure.
stories from
And the grit and the confidence and the conviction our parents had. Oh, it's amazing. Amazing. Hats off to those fathers.
right. The things that I have been seeing across, you know, across people these days, right? Finding the signal in the noise. In fact, that was one of the reasons why I actually even named this podcast and Quest,
Ah, yes.
especially in the field that you are in.
Yeah.
So many sort of influencers, you are, you know, markets are 24 by 7 now. Some market is open all the time, right? And there's a
Yes.
constant sense of FOMO for everyone. Filtering is really, really important. So, what is your process of separating signal from noise?
I think for somebody who's actually in the market, it's easier because we know what to listen to. So for me, anyways, it's first principles. You read a lot. What do you read? You read annual reports. You listen to the managements. We have a curated list of fund managers who we follow what they're saying and doing. Business magazines, newspapers, all of that. So there's a lot of reading. Second, fortunately, Harish, the data availability now is easier. Earlier, you had to put in for the same data, you had to put in more effort getting it, but now the data availability is easier. So creating your own database is much easier. Or so very what we focus on is gathering a lot of information, gathering a lot of data, but not gathering opinions. That's what we do. Because our edge comes from making our opinions, but which is backed by data, which is backed by information. It's not, out of thin air that we have an opinion because having an opinion is the lowest form of knowledge. Okay. So we create based on databases and the information that we have gathered, analyzed, curated. So that is where we come from. Like CNBC, even I've never watched CNBC, for example. But now, if you're not on the market, then it's very difficult to say who's right, who's wrong, what the influencers are saying, and sometimes there is so much of misinformation or half-baked information, which is even worse out there. So for somebody who's not in the market, it is really difficult. For somebody who's in the market, for me, sometimes it becomes easier in the sense the data is much easily available, and we know what to listen or what to ignore. So you just tune out everything else. For me, it's not that difficult, I guess.
Yeah, so I remember reading this book by Punak Prasad about, I
Yes.
think,
Darwin?
yeah,
Yes.
yeah,
Yes.
taught me about investing.
Yes.
I think one of the things that I picked up from that was what were the high cost signals, right?
Yeah.
Something like, what a peacock does. It because it's actually, putting out its feathers and all, it's actually making itself more susceptible and vulnerable to predators.
Yeah.
Uh, but, putting out a press release saying, we are doing so many great things, or putting out things on our CNBC is the easy bit. Just because, people are doing it does not mean that, they are great. So what is the signal that we can look at, which really takes some effort and could have been costly for them, is what he looks at. That was the message that he had taken from the
No, absolutely. And by the time in our industry, anyways, if it's on CNBC, you're already too late in the game. Okay, so even long time back, I had, and this was an interview long time ago in Outlook magazine. I was fortunately rated the best Indian analyst for that particular year or whatever. So I had actually come out with a list of leading indicators. So you follow the leading indicators, and it's the whole thing about investments and charting, trying to map out the cycles, forecast the trends, Find out the leading indicators, and that is what you focus on.
What are the examples of leading indicators that you can educate a noob like me?
Now, yeah, I'll have to just think of, but they're just very many. We would see the freight movement that has started taking place. You would just look at the, for example, you stand at a toll booth and you can just see the number of cars going by, and that would possibly a lead indicator of the sales, auto sales picking up and all that. So yes, there's a whole list of lead indicators to identify how the economy will pick up. And then those lead indicators and say which sectors will pick up in which order. So it could be auto first, followed by bank and all that. So yes,
Right. Yeah.
that's a science in itself. It's,
Yeah. Yeah. So one of the interesting things around this is I don't know if you know Akhilesh Dinotia.
I've heard of them, sorry, yes.
Yeah, so I've done a podcast with him as well. So he's a
Ah,
co-operated Thorough, which provides this alternate data sets of all kinds of data that the government provides.
yes,
So
yes.
one of the examples that he keeps talking about and done some work with them. So it's about data from say, NHAI, FastTag data, right?
Absolutely.
All that data is available today, and now with technology, you actually have that very easily available. But you need the right person to think of what to do with that data, right?
Exactly. So you have to have that list of lead indicators. So as I
Yeah.
say, NHI data, I had said, stand on the toll booth. Suppose economy is picking up and people are starting to travel, it will show up in hotels numbers a quarter later.
Right. Yeah.
Or in auto sector sales a quarter later, when they do quarterly review. But if you picked up that data and you see an uptick, like, year on year, month on month, quarter on quarter, you see an uptick before the results are out.
Right.
That's the indicator that you've identified.
Correct.
So,
I don't want to go beyond an hour of this. So you were talking about some of the other things that I wanted to talk about, which we'll cover. Vipassana.
honestly, but Harish, it's an hour. I can't imagine. I don't know whether I went honestly. And in fact, we started chatting before the podcast, and we could have chatted for an hour without remembering to
Totally
put
got
the
you.
camera on or the audio on. I can't
Yeah.
believe it's nice.
So tell me about your Vipassana journey. You said you started in '97. What triggered it, and what happened post that? Tell me about your painting. Tell me about your writing. Tell me about the other Shilpas that make you the Shilpa that you know.
Okay. There are many, many of them. Vipassana, my brother, somebody had asked him or suggested him to go do it. He found it deeply meaningful and he suggested that I go for a course. And I just started out in my career. I was still not yet married, 1 year into my career, and I just went, and that is the good thing about us, as we don't question the elders in our family much. Okay, if they say something not like it, you followed, and a lot of good came out of it, Harish. Because I might have questioned why attendance, why silence, what will I do? I'll get bored. I didn't caution because you didn't question some things. Okay. So I went and it was transformative, and then multiple courses since then, not as much as I would have liked to, but I think, yeah, quite a lot. And they're deeply relaxing, rejuvenating. So the whole thing, if I have to say in one or two lines in Vipassana, it's about developing awareness and equanimity, and it's rooted in the whole thing of impermanence. Anitya hai, ye anitya hai. And good or bad, this too shall pass. So, and that philosophy really anchors so you don't jump with joy when something really good is happening, nor do you sit crying a bucket of tears when something goes bad, because this too shall pass. But that is a core of Vipassana. And of course, there are multiple layers to it. And it is just the right way to live life.
And you would highly recommend that to everyone.
Absolutely. And it is not, you need to step out or, you can still be what we say in Grahast ashram. You don't need to don robes and be a monk or a nun. You don't need to, they tell you how to live how to live your life the right way. And that is what it is about. And as I said, once you do it, you realize the tailwinds that you get by just doing the right things. You can't quantify it, of course, but they are there.
Always wanted to, haven't done that. And now
You must.
I
You must. If one thing I would say out of this podcast is, okay, two things. Be an investor with us. Sorry, I can't suggest that. But whether you do that or not, but do go for Vipassana, I think so. So I'm going next month again.
so
Uh,
you're more to Igatpuri for this?
so I started my first one with Igatpuri. I've done a few there, some at Bombay, a couple at Pune. So yes, this time I'm going to Igatpuri. It's a beautiful center. There are waterfalls right at the back, and it's beautiful, beautiful center.
So tell us more about your the painting side and about your writer side.
Ah, so okay. I have Harish talked about the role of creativity in general, in leadership, and as well in professional personal lives. If you look at it, maybe you and I, we are more left brain oriented. So if you can see the left side of the brain and the right side of the brain, left is more quant, numbers, logic, and most mathematicians, scientists, and all that would be that. And then there's right side of the brain, which is music, art, which is very creative and imaginative and emotional. So that is the right side of the brain. So I feel creativity is the bridge between the two, and when you can create that bridge, generally magic happens, and that cross disciplinary in a way experience, that ability to connect the dots, that gives you an edge. So that is what it is. So some of it is natural for me, the creative part of it, but some, Harish, to be honest, I've developed on purpose.
Wow.
Yes, because I said I have to do that in the sense, I always like to draw and write. Even as a child, I was writing poems, but I have also developed it consciously, aside to painting classes, because, it activates a part of your brain which is not naturally activated. You won't own it. Uh, you know the story of Richard Feynman, of course, he was physicist, he was a drummer.
That came from the Bangalore routine.
No, he was a storyteller, and he won a Nobel Prize in physics for his work in quantum electrodynamics while playing drums. And so he is a great example. But generally, in my case, some of it was I was born with, but some I have developed and worked on it in purpose. Also, this is very relaxing and rejuvenating, whether it is painting or writing or gardening. It allows me to go deep within me, and that is something very, very nice. You shut out the outside world, you go deep within yourself. Now, whether it makes me a better investor or it's something that I can't quantify, but it definitely gives a lot of joy to my life.
I've heard people speak about, this is a passion for me. I don't want to turn it into something commercial
Yeah.
because then it'll put pressure on me. So,
Yeah.
how do you treat your creative pursuits? Do you treat them as purely for, my interest as a hobby,
Yeah.
or does your MBA come in and say, no, 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 you're spending time here, you need the money? And how does that play out for you?
So in investing, the temperament plays a very important part because the markets are up and down crazy. In March, the markets fell 11%, and you see your net worths and everything eroding. So these things, if I have to quantify the benefit, possibly give me an edge in terms of temperament because they calm me down, they de-stress me. That is the only quantifiable benefit. Or there is joy, and out of this I have not thought of creating any income stream out of it. For that I have Iravati, which I anyways am passionate about and I enjoy. So for that is my commercial, and this is just pure joy. This, even when I wrote books, the idea was to just put books out there, not sharing money out of it. Anyways, in India, most of the authors are Jholawala authors. It barely covers my petrol expenses, my royalties, to be very honest.
So that is more about the books that you wrote as well. So
Yes, yes.
how did those come?
Uh, how did it come on? I think I always liked writing. That was also a short sabbatical that I had taken with the kids growing up, and there was not a process to it, but I said, okay, this is a good thing that I have not done before. Let me just try writing books. I wrote Ananya. which is more about a teenager story, you know, coming to age of teenager story. It got very good. It was very well received. And it's part of certain schools also, because it had certain lessons in it. And then second book, I enjoyed doing it. There was an organic or a well thought process behind it, but because I was also the break, a corporate break, and I did these things.
Yeah. So there's so many hats that you wear, and a woman founder as well, a leader. So which of these hats do you really love, and which of these hats do you feel that, oh, this is a challenge domestic work?
Oh, I think the only hat one would like to wear is whether I'm a good person or not. Honestly, nothing else matters. All these are just facets of a character. And I'm sure everybody wears multiple hats. It's not only me. You if you look at anybody, if you look at guy, he's a father, a son, he has multiple responsibilities and so many things. So everyone is wearing multiple hats. My only hat is, are you a good person or not? That's the only hat I would like to wear. And have you in any way contributed back to the society? Have you left the world a better place or not?
Yeah.
Could you contribute towards that?
Yes, yes. On that note, Shilpa, we'll bring this to an end. And like I was telling you before we started this, I think I will, bring you for a part two. There are more questions that I had listed down which I want to cover, and I would love to do another, learning session with you. It's been a great 1 hour, fantastic conversation, and a lot of food for thought for me.
Thanks, Harish. It was a complete joy. I enjoyed it a lot, and honestly, I can't believe it's an hour already. So much fun talking to you. The questions were amazing. And I have so much to learn from you as well. So when I start my podcast, you're going to be there on it.
Thank you.